Good morning and welcome. You're watching Market Cafe on ET Now. It's a Tuesday morning. With me is Ankita Saxena. I am Harsh Saita. We, in this show, take you through all that's happening in global markets as well as what's happening on the domestic front. News, business news, as well as the larger stock-specific news that has come through since close yesterday. So we'll help you catch up with everything that's happened and, of course, prepare you for the trade today. But quickly starting off, Ankita takes us through all that's happening in global markets. Largely positive, Ankita. How do global markets look?
Good morning, Harsh, and good morning, everyone. Yes, good global handover coming in, Harsh. We do see the investors a bit relieved by the measures taken by the Fed. And yesterday also, the Dow Jones Industrial Average rose, building on last week's gain. Dow gained 194 points, or was up more than 0.5% in trade. The S&P 500 was up 0.2%. However, the tech-heavy Nasdaq Composite was bucking the trend, finished lower by 0.5%. Now, regional banks rose broadly. The First Republic surged 11.8%. PacWest also gained 3.4%. The market sentiment is seen improving, Harsh, like I mentioned, as policymakers have taken steps to alleviate the recent challenges. Now, an extension of the liquidity facility that had been set up by the Federal Reserve has eased prior concerns that a series of bank runs could be in the offing. Now, let's look at the European markets. Now, European markets also closed higher at the start of the new trading week, with cautious optimism returning after a sharp loss in the Friday session. The Pan-European Stock 600 index closed up 1.1% with all the sectors in the positive territory. DAX closed up 1.1%. FTSE and CAC were both up 0.9% trade. So a good positive handover coming in there. Harsh, take us through how the crude is faring right now.
Well, yes, Ankita. In fact, sharp moves by crude on the positive side. They've moved higher and sharply higher. We're seeing WTI above that almost at the $73 a barrel mark. It was sub 70 yesterday, and we're seeing Brent now at $78 a barrel, which was below the $75 a barrel mark. So we're seeing sharp gains on oil, at least at the moment. Couple of reasons. One is, as Ankita did mention, it's on the back of the fact that there is some amount of resolution that's happening with regard to US banking. So there is more optimism with regard to growth going forward. So that's one positive. The other piece is also that within Kurdistan, which contributes around 450,000 barrels per day, which is around 1% of or 0.5% of the total crude production, has been halted with regard to exports. So that supply has been plugged, at least temporarily, which will mean we'll have to wait and watch as to what happens on that front. But at least at the moment, the market's factoring that in as well. So we've seen a sharp rise, 2% plus in crude, largely on the back of those two reasons. And that's where we stand. Ankita, talk to us about what to watch out for today in terms of events.
Right, Harsh, let's quickly take you through all the events that will take place today. It's an action-packed day. Back home, we have Vedanta, who will be holding a board meet for the issuance of a fifth interim dividend. We also have Rushil Decor. The fundraising committee will be meeting today on the rights issue. We have PNB Housing Finance that will be holding its board meeting on the rights issue again. And we have NHPC that will be holding a board meeting on the rising debt concerns. We also have IFCI that will be holding its board meeting to consider preferential issue of equity shares to the government of India and premature redemption of certain bonds. These were the events back home, but let's quickly look at the global events. Now, we have the US Senate Banking Committee that will be holding a hearing on the bank collapses. We also have the Treasury Select Committee hearing on the Silicon Valley Bank. We have the speeches by ECB President Lagarde in Frankfurt, and we have the passing out parade of Navy's first batch of Agniveers today as well. In Delhi, we have the House meet to finalize the budget expenditure. And of course, Apple has also announced a new classical music app launch that we will see happening as of today. And finally, we have the Canadian government that will be presenting its 2023-24 budget as of today. So a big action-packed day coming in there. Harsh, take us through what are the headlines, global headlines that made news overnight.
Well, yes, let's start off with Saudi National Bank. Days after the share slump of the troubled lender Credit Suisse, the Saudi National Bank Chairman Amar al-Khudairi resigned from his post. Do remember, his resignation comes a day after he said in an interview that Saudi National Bank is absolutely not open to further investments in Credit Suisse when asked if they are open for additional liquidity. Saudi National Bank is the largest shareholder of the Swiss lender.
And Federal Reserve Vice Chairman Michael Barr says that the SVB collapse was largely due to the mismanagement, added that the bank waited too long to address the problems. The overdue actions it finally took to strengthen its balance sheet sparked the uninsured depositor run that led them to eventually fail. Alongside reassures Congress on the US banking system being sound and resilient.
Well, switching over to Israel, because that's in focus, in the latest, Prime Minister Netanyahu has announced that the controversial decision to overhaul the country's judiciary will be delayed. This after months of protests, growing labor strikes and opposition within his own government. The delay means that the bill will not be put to a vote in Parliament until the end of April at the very earliest.
And well, keeping with Israel, for over a month, thousands of Israelis are out on the streets to protest against the sweeping judicial reforms announced by the Prime Minister Benjamin Netanyahu. Now, in January this year, Netanyahu coalition government had announced its plan to overhaul the country's judicial system. Now, that are these proposed reforms. What are these proposed reforms and how will they impact Israel? Here's an explainer on that. Let's take a look.
For over a month, thousands of Israelis are out on the streets to protest against the sweeping judicial reforms that have been announced by Prime Minister of Israel, Benjamin Netanyahu. Over the weekend, fresh protests have erupted in several Israeli cities. Many of those protests have turned violent as well, after Netanyahu especially fired his defense minister for speaking out against the proposed legislation. So in a sign of things to come, the general strike called by Israel's largest trade union has seen doctors, teachers, even students join that strike. Flights from Israel's Tel Aviv airport have been grounded. Israeli President Isaac Herzog has warned that the country is on the brink of constitutional and social collapse. So what is so controversial about the proposed legislation? Well, in January this year, Netanyahu's coalition government announced its plans to overhaul the country's judicial system. There are four major changes that have been proposed under the new law. First, the Netanyahu government wants to arm the 120-member Israeli parliament, the Knesset as we know it, with the power to override any Supreme Court judgment by a simple majority of just 61 votes. Secondly, it wants a greater say in the appointment of Supreme Court judges. The proposed changes would give Israeli lawmakers a majority in the committee that elevates judges to the Supreme Court of the country. Thirdly, it intends to scrap the test of reasonability that the Israeli Supreme Court has often relied on to strike down executive decisions. And lastly, the proposed law would allow ministers to choose their own legal advisors instead of relying on independent professionals. Critics argue that the proposed overhaul is meant to shield Prime Minister Benjamin Netanyahu, who is facing charges of fraud, bribery, and breach of trust in an ongoing corruption trial. Further, a weakened judiciary may fail to protect the rights of minorities in Israel, especially Palestinians. It may also give unbridled powers to the Israeli parliament and thus remove any checks and balances within the system. Opposition to the proposed changes have come from several quarters. Several former Mossad chiefs have spoken out against the reforms. Hundreds of reservists in Israel's army have warned that they will not answer the call to serve if these reforms are passed. Israel's central bank governor, Amir Yaron, has called these reforms too hasty and a risk to the economy. We got in a word from protesters in Israel. Listen in to what they had to say.
Haven't the Jewish people suffered enough? That's the best sentence we can say now. Go home. Go home, leave us alone. I don't care who will come instead of him. anyone is better than Netanyahu.
When the Minister of Defense comes to the TV and talks to everybody and says, we're in grave danger, and our Prime Minister decides, oh, you're not loyal to me, so I'll fire you, it's annoying. It's not annoying, it's horrible.
I moved here 45 years ago, and I'm not going anywhere, okay? I'm here for the fight to the end, all right? Even if they win now, I'm here to defeat them after that.
Well, we'll switch over. Entertainment giant Disney will begin layoffs this week. This will be the first of 3 rounds before the beginning of the summer that will result in as many as 7,000 employees being laid off. The company said last month that it plans to cut $5.5 billion in costs, including $3 billion in content spend.
And Bank of England Governor Andrew Baily sees a steep decline in inflation, says it has peaked in the UK, even as he flags that the path of inflation will not be smooth. Amid the ongoing banking turmoil, assures that the UK's banking system remains resilient to such shocks.
Well, and President Joe Biden addressed the nation in a news conference discussing the deadly shooting at a Nashville grade school that left 3 children and 3 adults dead. Biden said they are monitoring the situation very closely and have to do more to stop gun violence. He also mentions how it's ripping the communities apart.
And Warren Buffett's Berkshire Hathaway boosted its ownership stake in Occidental Petroleum to about 23.6% after buying nearly 3.7 million additional shares for about $216 million. Now, do remember, Buffett's company began buying large quantities of Occidental stock over 1 year ago, around when the Russians invaded the Ukraine, and has spent more than $1 billion this month.
Well, with that, we'll slip into a very short break. More, of course, on the other side. We'll go domestic. You stay tuned. Welcome back. You're watching Market Cafe on ET Now. We spoke with Lawrence Blanco yesterday, who's the technical analyst at CLSA, and he recommends accumulating Reliance Industries. He also expects a relative outperformance in TCS, but we also asked him for his views on M&M. Listen to all of that.
Mahindra again had been the big breakout that you saw early 2022. It met its upside target. And if you look at the chart over the past 2 quarters, you've seen a triple top pattern and a breakdown from that with a recent break below the 200 days. So we do think there's further downside risk for Mahindra. Mahindra would be a seller on that chart setup. Yes, Tata Motors is holding in the trading range. So you can potentially get some relative outperformance from that. TVSL is another stock that does show another potential topping pattern and would reduce exposure there. Well, you have to look at the large cap Tata Consulting, which is holding in the trading range. If you look further down the market cap side, you have seen weakness in Wipro. So it's really about staying in the large cap Tata Consulting that's holding its range. That's where the relative outperformance is coming from. We've been in a trading range since the 3rd quarter of 2021. I mean, the interesting thing, as we've highlighted recently, it's bottom end of its range, downside momentum slowing. So we do think that does hold support and rebounds off the support level around the 2100 area to remain range bound. So accumulating down here, I think, is a good risk reward entry point.
Cafe. Let's go domestic and look at the news coming in on the domestic front. Now, the EPF interest rates are likely to be announced as of today, and the current rate is at 8.1%, and it is already at a multi-decadal low. Now, EPF subscribers, are they going to expect a rate hike or not as countries move towards higher interest rates? Let's listen in to our consulting editor, Maithili Bhusnaramat, who will be weighing in on this.
So the interest rate on EPF, in fact, did not fall dramatically during the time soon after COVID, when interest rates fell so dramatically. When the RBI lowered the repo rate and interest rates fell, the repo rate was reduced, but the EPF kept its rate about 8.5, if I remember right, during 2021, and 8.1 during 21-22. So the rate, though it's broadly in consonance with general rates, is not entirely, it's not a one-to-one relationship. because the EPFO pays its rate from the return that it gets on its investment, and it's tried to maintain the return on more or less the same level so that people, the beneficiaries, the subscribers, don't have sharp swings in their earnings from their provident fund. So even though you might say there is a case to raise interest rates because rates have gone up, inflation has gone up, many people have lost their jobs, so they do look forward to interest rate on EPF, one must understand that it is not as if, there's a pot of gold at the end of the rainbow. The EPFO can only pay from the return that it gets from its investment. And broadly what it does, it tries to ensure that even when rates fall down very low, it gives its subscribers a reasonable rate of return. And during the times when the rates are very good, it's earning very well, it tries to build up a corpus. So one can argue that yes, there might be a case to move it up a little bit, but one cannot say that one has to move up as dramatically as, say, bank deposits, which have gone up by about 3% in the last 1 year. So one has to bear in mind where the EPFO pays from, what is it essentially, a basic form of social security, and then take the call on what is the rate to be paid.
Well, that was, of course, our consulting editor, Maithili Bhusnarmath. We'll quickly move on. Praveer Sinha says the company is in discussions with the shareholders and the government regarding the Mundra PPA. Listen in. This is, of course, Tata Power. Listen in to this conversation with my colleague, Aishwarya Patil.
We are in discussions with all the stakeholders, including Government of India. And we do expect that this will happen sooner than later. So let's hope that we can conclude a mutually acceptable arrangement, acceptable to all the procurers as well as to us and the government, so that the plant can operate at full capacity and provide competitive rate power to the consumers.
So in terms of profitability and under recoveries, can you comment a little bit on that? Since this Mundra and PPA will soon be fruitful, after post the announcement comes in, a word on that.
At this stage, we are in silent period and we would not be able to give any details. So once our results are declared in the month of May, we will be able to share more details.
So a word on the renewables business. How do you expect it to grow? What is the capacity expansion that you have? What's the outlook like for this year?
So our renewable business is doing very good. As you know that we are in all the areas of renewable business, including manufacturing, EPC, utility scale, rooftop, solar pumps. And I think in each of these segments, we've done very well in the last 3 years. And I think the foundation is very strong for this business to really grow at a much faster pace in the coming years.
Moving on, Nadir Godrej of Godrej Agrovet shares his views on rising palm oil prices and its impact on the company. Listen in to this piece of the conversation.
The prices of palm oil have fallen. That makes it a little difficult for our oil palm business. But with the government's new policies, we've got a lot of allocation of new areas. We are expanding our nurseries. So this year we will be planting 12,500 hectare. So it's a very good expansion, and in the next 7 or 8 years we expect oil palm to grow very rapidly in India.
Okay, and so just in terms of quantify, if you want to say, expect how much would be the growth rate that we will be seeing for Godrej Agrovet coming in also for oil palm?
For oil palm, as I said, that every year we'll be planting more and more. Of course, it takes 5 years for the trees to grow, but after that we'll be producing much more oil. We are also working on getting better seeds in the future, and we see that the future for oil palm in India is very bright. India imports huge quantities of oil, and over time we can grow all of this in India.
Right, that was my colleague Vinny speaking, of course. But with that, we'll slip into a very short break. More on the other side, so do stay tuned. We'll go stock specific.
That time of the show where we go more stock specific, and for that we have Vamakshi and Shesha in the studio with us. Good morning to you both. But first up, Vamakshi, will go to you. Vamakshi, tell us what are the brokerage notes coming in this morning? What are they saying?
Well, absolutely. A very good morning to all of you all. Let's first start off with RT Industries. We have a note that has come in from Morgan Stanley, and they're highlighting that in the last 6 months, concerns on the demand front as well as the margin compression have already been priced in. They're seeing limited downside triggers at the current levels, and on the back of that, they've actually upgraded their rating on RT Industries from underweight to equal weight. They've given a target price of 484 per share. Hero MotoCorp is the next one on our radar. We have a note that has come in from Kotak. They're highlighting that they're expecting gradual recovery in the entry-level two-wheeler segment volumes. The competitive intensity is expected to pick up in the entry-level segment. The company has lost market share in the domestic motorcycle segment, and they're highlighting that weak demand trends and limited success of newer launches are a concern. So on the back of that, they've maintained a reduced rating and in fact cut the target price to 400 per share. And lastly, we will be watching out for Indigo. We have a note that has come in from Credit Suisse. They're highlighting that strong capacity constraints are visible in the summer schedule. Yields are reflecting a pickup. Indigo is quite confident of capacity growth despite supply chain constraints. So on the back of that, they've actually maintained an outperform rating given a target price of 2,450 per share.
Well, thanks so much for that, Vamakshi. Let's switch focus. In Jio's latest salvo to beat competition, the company has launched new broadband plans with the cheapest one for just 198 rupees per month. This will increase its addressable market size significantly. Somit is here with all of those details.
Well, Reliance Jio has come out with new set of broadband plans, and it has done it again by launching the cheapest broadband plan on the street at just 198. In fact, the plan is cheaper than most of the postpaid plans that we are seeing currently on the street. Now, they're offering around 7 new plans and have revamped 2 of these existing plans. And the plans range from around 198 rupees to 1499 rupees. And these most of these plans also offer bundled plans with TV channels and OTT offerings. Like the 298 plan has not only broadband service but 6 OTT apps plus 400 live TV channels, and the 398 plan offers not only broadband services at higher speed but also 14 OTT apps and 550 live TV channels. So why has Reliance Jio launched this new plans? Now, do remember that IPL is expected to start soon, and viewers will be available, can see a free IPL on the Jio apps, and to make the most of it, they have launched these plans right ahead of the IPL. Now, they're also targeting customers at the lower end of the speed and affordability by launching these cheaper plans, and mostly they're targeting the cable and the DTH users. Now, these plans will definitely increase the total addressable market size for Reliance Jio, as they are targeting also the cable and the DTH users. Now, by how much will their total addressable market increase? Nearly 11 crore users are there on cable and DTH. Nearly 4.5 crore cable users are present in India, and nearly 6.5 crore DTH users are present in India, and that will be the new addressable market size for Reliance Jio. Now, on an average, the ARPU generated by a cable or DTH users ranges from around 150 to 200 rupees per month. So that could give you an idea of what is the potential revenue size that Reliance Jio could generate from these new plans. Now, just to give an idea of how the broadband market has grown. Now, before Reliance Jio had launched, if you see 3 years till August 2020, that's when Reliance Jio had come out with first set of broadband plans. The broadband subscriber base had increased at a CAGR of just 4.2%. But since August 2020 till December 2022, the subscriber base has grown at a CAGR of nearly 22%. And that is the kind of growth that can be expected going ahead, also post the new launches that Reliance Jio has done. Now, when you compare Reliance Jio plans with Airtel Black plans, most of the plans are cheaper for Reliance Jio at in the range of around 6 to 14%. Like the 699 plan of Airtel Black is offering 40 Mbps of speed plus 350 plus channels, Disney Hotstar, Airtel Extreme, and a total of around 15 OTT apps. Similarly, if you see a Reliance Jio plan of 599, that is offering a low speed of 30 Mbps, but it's offering 14 OTT apps plus 550 live TV channels. There are other apps, there are other plans like the 999 plan, which is comparable with the 1099 plan of Airtel Black, and then there is the 1499 plan of Reliance Jio, which can be compared with Airtel Black's 1599 app. But Reliance Jio plans are offered at a discount of nearly 6 to 14% when compared with Airtel Black. However, there are some concerns regarding these new plans also. Firstly, if you remember, Reliance Jio had spent more than 10,000 crore rupees to acquire Hathway, and both these companies are cable operators. Now, given the fact that these new plans are targeting the cable and DTH users, this investment is now redundant for Reliance Industries. Also, the fact that companies offering cheaper broadband plans can cannibalize the growth of its 5G user base, because if people stick more on broadband, then the consumption on 5G would be on the lower side. So these are a couple of concerns that the street is worried about when it comes to Reliance Jio's new broadband plans.
All right, thank you so much for breaking that down for us, Samit. Now, let's look at WellSpan India's management meet, where B&K Securities have listed out all the key takeaways. Now, demand has weakened and bottomed out, and the flooring business is under pressure. My colleague Vamakshi, of course, is here with all the details. Vamakshi, take us through what were the key takeaways of the management meet?
Well, absolutely. Let's first start off with the demand front. Now, as far as the demand of the home textile segment is concerned, that has remained stagnant in the last few quarters, and that could be on account of lower discretionary spend that has come in on account of inflation, as well as the glut in inventory that we saw with retailers. Now, the situation seemed to be improving as the company has highlighted, and they believe that their customers have now started placing orders. The volumes that are expected in Q4 are expected to be better than that seen in Q3. Now, as far as the costs are concerned, average cotton costs are nearly 7% lower in the fourth quarter. Average freight costs have also gone down significantly, and this in turn could provide support to margins. The flooring business profitability is expected to remain flat. Now, when we look at the hard tile exports to the US, that is taking a bit of an impact as there is a housing market slump in the US. Demand in the domestic market, however, remains quite resilient. Now, as far as the capex is concerned, that is largely behind us, but the company is now focusing on debt reduction. In fact, net debt is expected to go down by another 200 crores this quarter, is what the company has highlighted. Licensing agreement with Disney is progressing, and in fact, they have already started sourcing orders. So overall, positive commentary coming in on demand. Their demand is expected to improve here on. Flooring business is, the domestic side is remaining quite resilient, and those are the important takeaways from WellSpan India.
Well, thanks so much for that, Vamakshi. Will take over. The other stock we will be tracking today is AB Capital. The company will be selling its insurance broking subsidiary to one of India's leading private equity firms, Samara Capital. Ashesha, talk to us about that. What's the perspective you can give us?
Absolutely. So, a board of directors of Aditya Birla Capital had approved stake of entire holding in Aditya Birla Insurance Brokers Limited, which is a subsidiary of the company, and the sale will be done to Samara Capital. Aditya Birla Capital held about a little over 50% stake in Aditya Birla Insurance Brokers, and the other partner, which holds about 49.98% stake in the company, in the insurance company, will also be selling its stake. Each seller will receive an additional consideration after a period of 5 years, subject to fulfillment of certain conditions. The entire subsidiary is being sold for about 455 crores, which implies a valuation of about 5 times if we consider September 2022 profit levels. However, Morgan Stanley has come out with a note where they say that they valued the insurance broking arm of the company at about 1140 crore rupees, which implied a valuation of 12 times considering September 2022 profit levels, which means that the stake sale is being done at a steep 60% discount as compared to Morgan Stanley's valuation levels. Now, post holding company discount of 20%, this particular insurance arm of the company contributed 1.4% of the SOTP valuation of the company. So, on account of this stake sale that has been done by Aditya Birla Capital, which has been done at a steep 60% discount as per Morgan Stanley's report, keep an eye out on this counter in today's trading session.
All right, Ashesha, now you are here and you have all the stocks that we need to keep an eye out for. Tell us what are the stocks that have caught your eye for today's trading session?
Yes, so it's raining order inflows for infra and defense companies. So we have one such infra counter first up in today's trading session, which will be in focus, Dilip Buildcon, and that is because the company has been declared L1 bidder for the tender floated by NHAI on hybrid annuity basis in the state of Andhra Pradesh. The total cost of this project stands at about 780 crore and the completion period is 24 months. On account of this order win that the company has informed the exchanges about. Keep an eye out on Dilip Buildcon. Moving on to Lemon Tree, which is clearly in an expansion mode. The company has opened its 5th hotel in Kerala under the company's brand Keep Rima by Lemon Tree Hotels in Thekadi. The hotel features about 42 well-appointed rooms. So on account of this expansion that the company has announced, keep an eye out on Lemon Tree Hotels as well. Moving on to Ashiana Housing then, where the company has been confirmed highest bidder by HSIIDC. The bid is for purchase of land through e-auction. The consideration for this purchase of land stands at about 197 odd crores. PNC Infratech will also be in focus, and this is yet again on the back of an order win. The company has been declared lowest bidder in a Ministry of Road Transport and Highways project. This particular project will be done on hybrid annuity mode for a bid project cost which stands at 819 odd crores. Lastly, Emami will be in focus, and that is on the back of buyback news. The company has approved buyback, which will be done via open market route. The total buyback size stands at about 186 crores. It will be done at a maximum price of 450 rupees per share. And the record date for the same is the 12th of April. Remember, this is an open market buyback. So on account of this news that has come in, keep an eye out on Emami as well.
Well, thanks so much for that, Ashesha. We'll move on. IEX is also going to be in focus due to an array of reasons such as unseasonal rains, electricity demand, analyst notes, and the Dalmia plans to exit stake as well. Sharad joins in, who's going to take us through all that's buzzing.
Well, yes, India Energy Exchange is having a lots of headwinds coming in, and the important thing is coming in that the March month's volumes, that has come down, and that has come down 12% on a year-on-year basis. Now, these are the aggregate numbers for it. Multiple reasons coming in, and of course unseasonal rains is one of the main factors. Apart from this, there was a sudden dip in temperatures also across India, and because of that what happens is the electricity demand falls. Because of that, the peak electricity demand actually fell, and they impacted the exchange volumes as well. Now let's looking at the numbers. The analysts have also stated that there would be potential downside risks coming when it comes to the EPS estimates, and overall if you look at even the average prices, that has also fallen almost 16% on a month-on-month basis. Now the volumes have fallen, the prices have fallen, and overall if you look, the All India electricity supply in March so far has declined 1.6% on a year-on-year basis, and if you look at on a month-on-month basis, then also it's ranging between 4 to 9% on the downward side. Yesterday itself there was a stock pressure overall because in a con call, Dalmia Bharat had actually stated that they will be actually exiting their stake and actually reducing it first. Now do remember they are having almost 15% stake in IEX, so going ahead they will be actually reducing the stake and at the end completely exiting, and because of that there was a selling pressure in the last trading session.
All right, thank you for those details, Sharad. Moving on, the first trade and investment working group meeting under India's G20 presidency will begin in Mumbai today. Now, what will be on the discussion priority and agenda? Well, my colleague Ankur joins in with more details about it. Over to you, Ankur.
Yes, it is the time of Mumbai now, and the Trade and Investment Working Group meeting is going to begin, and the key push may be there this time for a rupee trade settlement system. Officially, this is not part of the agenda, but when ET Now asked a question to Commerce Secretary, we were told that this is one of the considerations that the working group will consider in the meeting which is going to begin today. Apart from that, as far as the focus areas are concerned, one of the focus area will remain as the trade for growth and prosperity for all the G20 countries. Apart from that, trade and resilient global value chains is something which the working group will deliberate in the meeting which will be held for 3 days. The integration of MSMEs in global trade is also one of the priority areas which this meeting will consider. Remember, MSMEs has been something which has been advocating that there should be more focus there, and as far as the trade finances are concerned, there should be more opportunities. The considerations may be there for creating a common kind of a platform and also pushing for digital technology for usage. The integration of MSME in global trade therefore remains the key focus area of this meeting, and logistics for trade is also one of the key focus areas which is going to be discussed in the meeting which is going to begin from today.
Well, thanks for that, Ankur. We'll switch focus. Tata Consultancy Services is poised for widespread reorganization of its top leadership, including the positions of Chief Technology Officer as well as Chief Operating Officer, with the top 2 executives set to retire over the period of the next 1 year. India's biggest software exporter will also pick a new head for its largest vertical, banking and financial services and insurance. 4 to 5 candidates are being evaluated to fill in the position vacated by the now CEO designate K. Krithivasan, and Marik Mayank, who is the Chief Services Innovation Officer, is likely to take charge as the CTO after the retirement of K. Anant Krishnan in October. Krishnan Ramanujam, who is the president of the Enterprise Growth Business, is among the front runners for the post of COO, as TCS veteran N. Ganapathy Subramanian also retires in May of 2024. Debashish Ghosh and Sushil Vasudevan could be the other contenders for the CEO post.
All right, with that, we're completely out of time on this one. Thank you so much for tuning in. Don't go anywhere. The markets will take the action forward.
City